earnings season is also upon us, and the first in the pipeline, as always, will be the IT companies. And they have had a tough time. Last week the trigger, of course, was that Accenture downgrade that happened. They have downgraded their forecast, and the last time that I remember it happened, it was bad news for the IT companies. Now we have already seen a knee-jerk reaction on Friday. Is the pain likely to continue? And more importantly, what are your expectations from the Q4 print of the bellwether IT companies, Mohit?
Hi, Suresh and Amit. Always a pleasure to be on the show. Wish you and everyone of your viewers a very, very happy Holi. And we are nearing the end of this financial year, which has been a fantastic financial year for the stock market participants and for everyone who has participated in the equity markets in India. On the IT front, Suresh, honestly, I think Accenture guidance came out of the blue. Market wasn't expecting or anticipating this kind of a harsh guidance. They've cut the guidance very sharply, only 1 to 3% growth as compared to a 2 to 5% which was projected earlier. And the reasons which they've cited is global uncertainty and perhaps clients' demands not picking up and so on and so forth, which doesn't augur well for the bellwether IT stocks. And markets have already taken that into cognizance. The IT index is down almost 3.5% since the time the Accenture news came in. Prior to that, if you see last year, IT stock was actually one of the big laggards, in fact, for last 2 years, and only for last 3 6 months, IT index was actually picking up some steam, right? Which was more in anticipation of rate cuts coming into US sooner than what markets was expecting. There was an anticipation that the IT demand will pick up with the yields easing off. There was also an anticipation that IT companies have already bottomed out, and perhaps the worst was already in the pricing. With the Accenture guidance coming out, I think that fear has already again popped out of the can. To my mind, only the earnings season and the kind of earnings which domestic Indian companies will post out will assuage investors' fear out there. My sense is earnings on the Indian IT pack won't be as bad as the Accenture earnings forecast which came out in the US. To be honest, I think a few of the bigger IT companies have already baked in the worst of the scenarios last year and couple of quarters back. And my sense is the season this time will be more centered around some big deal announcements, some vertical expansions of these companies, so on and so forth. So I am not as bearish on the entire IT pack as it looks like. I think the worst has already been taken into account. The pack has been hammered. For value investors out there, for someone who really wants to take a slightly longish view, look, it's not a bet for another 3 months or 6 months. It's a bet for another year or two. If one is willing to put out money, I think they're all very reasonable priced. And I've often said in your show, these are very good allocators of capital, all these IT companies, and they have the wherewithal to fight the tide, right? So my sense is the pack should pick up. The earnings season should not be as bad as what has come out in the Accenture guidance, and that should be a bit of a positive surprise for the market.
All right. Gaurang, Mohit over here is expecting a slightly better quarter for the IT companies. It looks like he's saying that the worst is over. And we were reading about a lot of commentaries, brokerage commentaries. FY24 was pretty much declared to be a washout year. FY25, at least from what we are hearing from Accenture, it looks like that difficulty is going to persist from here on. But the valuations, sir, they ought to be looking compelling at this point.
So, Shreyas, I think as a brokerage house, we at Geojit have been positive on IT for a pretty long time. Even last 2 years, if you go to see when a lot of participants in the market were underweight on IT, we remained positive. See, short-term issues with respect to local and global events unfolding will have its impact on any sector, let's face it. Why only IT? But does that mean that you have to change your entire theory of long-term investment? In case if you have IT stocks in your portfolio, then we don't think it is warranted. And in fact, we had given out an add and accumulate call to all our investors who had invested in IT at higher levels to get into IT stocks likes of TCS, Infosys, HCL Tech, Tech Mahindra, LTI Mindtree, Science Limited, KPIT Tech, Tata LXI, to name a few. And from those levels, I think they have done reasonably well. In case if you would have got in at those levels, or you would have averaged in case if you bought it at higher levels. Then fourth quarter historically, is a little bit of mixed bag. Not that third quarter was not, because in third quarter we also saw some of the mid cap ITs which were otherwise giving stellar performance compared to large cap IT names did underperform. So it's seasonality, I would say. If you don't have 3 months, 6 months kind of time horizon, I think even after the kind of recovery that we've seen in some of the IT stocks, it still warrants a second look and an investment. And I'm sure that this global headwinds that we talk about in terms of budgetary cuts, discretionary spends, will definitely be a thing of past, because in today's complex world, Suyash, the kind of cyber security you need, you can't stay away from upgrading your IT platform.